Hi, everybody. My name is Robin Spezialy, and I'm the best-selling author of Market Masters, Interviews with Canada's Top Investors. So in this video, I'm going to be talking about my recent bad quarter. It's a portfolio update. It's of the third quarter, and I'll be discussing my year-to-date performance as well. So things don't always work out in life. It's no different in the stock market. The bad news is that the indexes, the S&P 500 and Dow Jones, beat me this recent third quarter. So again, this third quarter of 2017 ran from July through September, 3 months. But the good news is that I'm still beating the indexes, the TSX, the S&P 500, and the Dow Jones on a year-to-date basis. So all the way starting in January through September. Okay, and I'm beating the indexes with a 17.42% year-to-date return. I attribute my bad quarter in the third quarter to my weakness in the small and mid-cap segments that many investors have experienced. Or maybe I'm just losing my touch. So many of you know that a large portion of my portfolio is concentrated in those small cap and mid-cap stocks. And when I say small cap, I'm saying companies with market capitalizations on the market between 300 million and then all the way up to mid caps, which trade upwards of $10 billion. And I'm also investing now in micro caps. So I would say micro caps are, sub $300 million market cap companies. So others have written about this general weakness, and I post 3 articles or include them in my newsletter. If you go to robinspezialy.com, you can subscribe to my newsletter. And you can see my issue on my bad quarter, and you can look at that, all those posts. However, things might be looking up after the third quarter here of 2017. Jerry Wimmer, who I've featured in my newsletter in the past, concluded, today many of the small cap stocks that were priced for perfection just 6 months ago have seen their share value decline significantly. On a valuation basis, now might be the perfect time to buy them. End quote. Note, I should also add that the summer months, which are in Q3, tend to see lower activity across the market. With that saying, sell in May and go away. Okay, so let's get to my top 10 performers for the third quarter 2017. So it wasn't all that bad, even though I didn't beat the S&P 500 and Dow Jones in the third quarter. Right, the last 3 months. I had some pretty good ones in my top 10. Okay, so 2 stocks in my top 10 had takeover announcements. Pacific Insight Electronics, which is up 89.3% in the third quarter, and Jean Coutu, which is a pharmacy here in Quebec and other provinces in Canada, was up 22% on a takeover announcement. If you've followed me since the beginning of this newsletter and my videos, you'll know that I allocate money to what I call speculative takeovers. You can read about my Rona case study. Again, you can find that if you subscribe to my newsletter on robinspezialy.com. Rona was another speculative takeover where I speculated that Lowe's would come back and bid again for Rona, and Rona was up 100% the day that the announcement was made, second announcement, and the deal had gone through. And you can also learn about all of the ways that I pick winners. Buying speculative takeovers isn't just my only strategy. I buy mispriced large caps, and for the majority, 80% of my portfolio, I buy small cap and mid cap capital compounders, as I call them. You can read more on my website. So again, in the top 10 for the third quarter, Canopy Growth Fund, which used to be Tweed, was up 34%. I initially started buying Tweed, which is now Canopy Growth Corp, at around $1 per share. And it's recently been rebounding after some weakness. I still hold the thesis that Canopy Growth will be a leader in consumer weed products. I initiated 2 new positions at the beginning of Q3 that appear in the top 10. So Match Group, which is up 33%, and Tencent, which is up 22%. Tencent is I would call it the Facebook of China. Now, a little more about Match Group. So Match Group is a consolidator and operator of popular dating apps, including Plenty of Fish, OkCupid, Tinder, and more. Their financials and growth numbers are pretty good. And let's face the facts. The online dating now is the norm, at least here in North America. I was recently talking to my cousin about this shift and bringing up Match Group stock. I remember when in 2005, maybe 20% of girls were on online dating apps and sites. Sites were more prevalent in 2005. This is pre-iPhone, everybody. Now, 10 years later, 10 plus years later, 2017, I would say about 80% of girls are on dating apps now, especially Tinder and sites like Bumble, which Match Group does not own, but they own Tinder. So, guys just go to where the girls are. That's how it works. In 2005, most girls would say, dating sites are for losers and creepers, but now it's fun. I'll say, though, that even though with the shift, I'm still always told, sorry, I have a boyfriend, when I approach girls in bars. Anyways, things may never change. So no surprises with National Beverage. National Beverage Corp has been doing quite well over the past 2 years. It's recently hit a little bit of a rut because Coca-Cola announced a takeover of one of National Beverage's competitors in the no calorie, no sweetener, natural carbonated water segment. But in Q3 of 2017, National Beverage was up 32%. Spin Master, also in my top 10 for Q3, was up 24%. Spin Master is one of the biggest toy companies now in the world, top 10. Both of those stocks, National Beverage and Spin Master, have done really well for me over a long period. I hope they remain those exceptional capital compounders. Another in my top 10 was Alibaba. I bought Alibaba at its IPO. People thought I was crazy, but I thought Alibaba was cheap, relative to Amazon and the other American tech companies. And now Amazon and Alibaba have virtually the same market caps, right around $460 billion. It'll be fun to watch which company reaches 1 trillion first in market cap. My money is on Alibaba reaching 1 trillion in market cap. In my Q2 portfolio update, I listed some stocks on my watch list. However, since then, I've only initiated a position in one stock from that list, which is Fairfax India. Fairfax India is a subsidiary of Fairfax Financial, run by who many call Canada's Warren Buffett, Perm Watsa. Okay, so my top 10 performers, I'm going to list them all. I'll put them in the description in this video, but these are my top 10 stocks from the third quarter of 2017. Okay, from highest to lowest return. First was Pacific Insight Electronics. Number 2, Polar Banknote. Number 3, Canopy Growth Corp. Number 4, Match Group. Number 5, National Beverage. Number 6, Shopify. 7, Spin Master Toys. 8, Alibaba. 9, Tencent. And then 10, Zhongkutu. So the last couple of weeks, and this is kind of dated, since I released this newsletter and then posting this video, but last, let's say, month, I've been pretty busy. I've given speeches at Queen's Master's Finance Program, at Brock University's Goodman Business Student Association, and also U of T's Institution of Management and Innovation Finance Competition. All of these are in Ontario. I'm from Canada. As many of you know, I live in Toronto, and I hope to do more speeches soon. And, hopefully I will meet some of you in some of those speeches. A lot of you are busy during the summer months, so please catch up on my videos. I started posting from June all the way through August, and sign up for my newsletter on robinspeziali.com. So thank you very much, and have a great day. Bye-bye.